Hey, Bulls and Bears, what is happening? It is Sunday, March 12th, 2023. I have trouble keeping up on the weekends. I try not to think about time or the calendar on the weekends, but unfortunately, life snaps back to reality on Monday. But here we are on Sunday. I wanted to put this out. Everybody knows in the financial world, everybody knows the big news. The second largest bank failure, Silicon Bank, went down. If you have your money in a bank right now, you are a gambler. And I'll elaborate on that. You are a gambler. You may say, no, I'm not a gambler. I don't go to casinos. Folks, the whole financial system is a casino right now. This whole thing could collapse at any point. All the banks have failed. All the banks have failed. The only reason the banks are still operational right now is because of the regulators have allowed banks, and this is going on for decades. This is not just something you can blame on just the current administration. This is decades long. Banks are allowed to loan out money they don't have. It's called leverage. 99.99% of the people have no idea what this even means. But they're finding out. And some of these people are lined up around the bank. I just got sent a few photos from people lining up around the bank, and it's Sunday. So they're lining up and they're waiting for banks to open uh, on Monday. This is crazy. People said this could never happen here in the U.S. We've reported here on this channel many times over the years, other countries where people were waiting around the block or waiting in lines around the block to get their money out of the bank. Oh, it'll never happen here. We've got the world reserve currency. We're the world's richest nation. Yeah, that's what you were told. You were told we're the world's largest or the world's richest nation. We're actually the world's largest debtor nation. So a lot of things are just the opposite of what most people think. The reason we appear as the richest nation is because we run up the most debt. And we're able to do that because we have the printing press. We have the world reserve currency. We have a debt ceiling that gets raised and raised and raised because people are afraid not to raise it because the people that decide if it gets raised or not, their jobs are on the line if there's a big economic downturn on their watch. So, of course, they're always going to raise the debt ceiling. All right, but let's talk about some recent news. But yes, all the banks are insolvent. If you have your money in a bank, you are a gambler. What do I mean by a gambler? Well, do you know exactly how leveraged your bank is? Do you know how leveraged your credit union is? Right? So I think all banks are leveraged. In fact, I know all banks are leveraged because they wouldn't stay in business if they weren't. If banks could only loan out money that they had in deposits, they wouldn't be able to give out many loans. And if they did, the interest rates would be so high that they wouldn't be competitive with all the other banks that are leveraging themselves to the hilt. So they would go out of business very quickly because no one would want to get a loan at an interest rate that was double or triple all these other banks, right? So it's competition amongst banks. Who can leverage the most? Who can take on the most risk? Who can loan out the most money at the lowest interest rate? All these subprime loans. It starts at subprime and then it goes up. But this affects everybody. So if you don't know how leveraged your bank is, then you're gambling, right? Even your credit union is leveraged. Now, I think we're going to see a lot more banks fail, and I'm not the only one. We're going to talk in a few minutes about other people making predictions that this is just the beginning of the systemic failure of the banking system, and that we're going to see more bank runs. And it's not just Joe Blow from down the street; it's people you've heard of are making this prediction. All right, so we're going to talk about that. All banks are leveraged. All banks have already failed. It's just most people haven't realized it yet. You see, the reason the FDIC came out and in that meeting that we talked about January, the reason they came out was they're talking about how to tell the public about what's happening in the banking system. And that was one of the premises of the meeting. Banks have failed. It's just most people haven't realized it yet. So now that people are seeing the bank runs, they're going to wait in line to try to get their money out because they're now starting to lose trust in the banking system. So really, the only thing that's held this banking scheme together for this long is trust and people not knowing what's going on. That's what it is. So basically, you could say deception and lack of knowledge. Deception and lack of knowledge is what's kept this banking scheme going for this long. Once people find out that the money's not there, as soon as you put $1 in the bank, it's loaned out 1,000 times over. And that's the way all banks are. Now, I think some of the credit unions are a lot better than some of these regional and even national banks. Now, SVB, Silicon Valley Bank, was a regional bank, but regional, national, local credit union that only have a few local credit union that might only have a few branches around your neighborhood. They're all leveraged. They have to be. They couldn't even stay in business if they weren't. The question is, how leveraged are they? And what type of panic is their customer base going to have? As soon as you have even a fraction of the people with deposits at the bank, as soon as you have that amount of people go and try to get their money out, that's when you see who's leveraged too much and who's not. All right, so nobody knows exactly. I don't know. You don't know. I don't think anybody knows exactly which banks are going to make it, which banks are not. Some people say none of the banks are going to make it because they're all leveraged. It just depends on the level of panic and the number of people that try to pull their money out at the same time. But we have stories here about people lining up already at their branch of their bank. All right, so let's get into some of the news here. Janet Yellen, she's out there saying no bailout for Silicon Valley Bank, but the feds are working to prevent bank contagion. Now, we touched on that in our last report. The contagion's already here. The contagion's already here. Look at all these businesses that lost billions of dollars. Roku, Bill.com, many businesses lost a lot of money. You think those companies are going to go out and hire more people now and add to their workforce after this type of a loss, even if it's only 5%? Do you think it's going to be these companies are going to be confident enough to say, hey, let's go ahead and expand our operations. Let's hire more people. Or do you think they're going to be cautious and probably do cost cutting and start laying more people off, right? If you said B, if you said more layoffs and cost cutting, I think you're right. And I think probably everyone here watching this said the same thing. So yeah, Yellen says no bailouts. She's working, or feds are working to prevent bank contagion. Yeah, just like they're working to stop poverty. They're working to prevent homelessness. They're working to help people, even though after all that help, the debt just gets more and more and more. Households getting further in debt all the time. Most households anyway. Next, Silicon Valley Bank gave company-wide bonuses hours before it collapsed. Federal regulators took control of Silicon Valley Bank on Friday. So yeah, are they going to turn turn their head? What's the the term, the phrase? I'm not very good on phrases that other people say. I try to come up with my own phrases. Turn a blind eye. Is that it? Turn a blind eye. Are they going to turn a blind eye to the insiders getting all these bonuses, to the bank president selling millions of dollars worth of stock a few days ago? I think they'll probably turn a blind eye to that. Stocks plummet. Bank stocks plummet as bank runs in the U.S. gain momentum. Federally insured non-traditional banks. So this is where it begins. I think the people actually trust the big ones even more because people hear SVB and they're thinking, well, that's not, a national bank, that's a regional bank. So maybe it wasn't big enough. But little do they know that the bigger banks, Bank of America, Wells Fargo, Chase, those banks, those big banks, are probably even more leveraged than some of these other banks that people think are the most risky. Again, have you looked at your bank's books, and have you researched how leveraged they are? Well, right now, ever since 2020, banks don't have to have money in reserves to cover the loans they give out. They don't even have to have a percentage, 0%. So that should tell you how leveraged it is. And I don't think anybody knows. It's kind of like the derivative total, globally. Nobody knows because it's so leveraged. From a source I trust, this is put out by Bill Ackman. I think a lot of us here know Bill Ackman, investor. SVB financial depositors will get less than 50% Monday and Tuesday on their balance. If this proves true, I expect there will be bank runs beginning Monday a.m. at a large number of non-SIB banks. So that's Bill Ackman saying that. I think a lot of you have heard of Bill Ackman. Elon Musk talking about buying SVB. Gosh, how much more can that guy take on? Wow. Thiel, Investor Peter Thiel got cash out before the collapse. Did a little birdie whisper in his ear? Maybe. Employees receive bonuses. We talked about that. Fallout spreads around the world. Let's look into that. So why would it spread around the world? Because people now are realizing that it's not just this one bank. It's every bank globally is doing similar type of a scheme where they're investing the money, they're loaning out the money, right? They do not have the money. And even if they did have the money, it's just digits on a screen. Less than 10% of all cash, what people call cash money, in existence right now, less than 10% is physical coins and bills or paper. It is digits on a screen. Now, the whole digit on a screen thing, that's also another thing that's giving people false confidence. Because when you hear that, you just say, okay, well, they can just type it in and put the money back, right? So all these people that lost money at SVB, they could just type it in and give it back. Well, it's still somewhat regulated. They still can't go completely ballistic. Some people will say what's happening right now is completely ballistic with all the lending. But they're still somewhat regulated. There's still a balance sheet that has to be reported, things like that. Contagion. Desperate customers line up outside First Republic to take money out. Will this force the Fed to slash rates? That's what I've been thinking here for a long time. I've been saying that I think they're going to slash rates, cut rates when the fallout starts to happen. This could be the beginning of the fallout. But now we have high inflation, and they're saying they need to keep rates high because inflation is still too high. So how are they going to cut rates with inflation still being high? Right? Even inflation over 6% is way higher than what they wanted. They have a 2% inflation target. People's incomes aren't growing at 6% per year on average. So even a 6% inflation rate is considered high. So are they going to cut rates? So again, they're caught between a rock and a hard place. Desperate customers line up around First Republic Bank to take their money out after SVB collapsed, sent shockwaves through the market. We have bank stocks selling off now, anywhere between just 2 and 5% up to, I saw one 25% bank stocks. So people are panicking. People are panicking. And there's a headline out there about this. Wall Street braces for next Silicon Valley Bank, folks. This is just one of many dominoes to fall. And we had already seen collapsing institutions already with the crypto banks. So this is just the next logical step to your regular brick and mortar regional and I think even national banks. Michael Burry warns another major bank collapse is coming. Michael Burry, famed investor from the movie Big Short, or the movie that talked about him there. Legendary investor says Silicon Valley Bank is just the tip of the iceberg. Investors wonder if there'll be contagion. There's already contagion. Are there any other banks that will follow? Question mark. At the same time, behind the scenes, regulators scramble to prevent many startups and small businesses that were SVB customers from running out of the cash they need to pay their employees and suppliers and continue to operate. Remember in 2020, all the cash that had to be handed out to businesses to keep them operational, the Paycheck Protection Program, massive intervention, freezing of foreclosures, rent moratoriums, you name it. I mean, there was money handed out here and there, left, right, all around. So will it have to be similar this time and probably even more handouts? And if they don't, there's going to be a collapse, right? I've already seen people on Twitter. I've seen politicians on Twitter talking about we need to bail them out because there's going to be too many job losses if we don't bail them out. See, that's always there, right? So when jobs are added because of leverage and because of all these financial schemes, when jobs are added, no one questions it. Everybody says, oh, the economy's great. Yeah, rah, rah, rah. But when jobs are lost because the Ponzi scheme has ended, then people say, oh, no, we need to keep it going. We need to do bailouts. So isn't it crazy how during the growth period or during the bubble inflating, everybody's, rah, 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 the economy's great. But when the bubble bursts and when the scheme is revealed and when banks start to fail, people say, oh, no, this is terrible. There's going to be job losses. Well, the jobs that are going to be lost should have never been there to begin with. If it weren't for the fake growth, then we wouldn't have the job loss or the bust to worry about, right? So amazing time to be alive here, folks. We're gonna definitely see some things this year that you're gonna be very, very surprised. I don't think I'm gonna be surprised. Well, I don't think most of us will be surprised. If you've been on this channel, you're probably not surprised at any of this happening because it's just a matter of time. Not if, but when. The street reporting, Mark Cuban had millions at failed Silicon Valley Bank. So billionaires lost a lot of money. Let's see, these people knew that the FDIC only insured up to $250,000. So why wouldn't they just spread it out over many different banks? But here's the thing, FDIC is also insolvent. It's another scheme. The FDIC is insolvent. You heard that right. So the FDIC is expected to insure about $9 trillion with a T, $9 trillion of deposits with about 125 billion worth of funds. And many people question if they even have the 125 billion. So that's another house of cards that's yet to be revealed. The legendary investor Mark Cuban, an entrepreneur, says he had an exposure between 8 and 10 million at the California bank. That's SVB. More warnings, folks. It doesn't stop. After Silicon Valley, this is out of Fortune, by the way. More warnings. Silicon Valley Bank failure. Quote, there's going to be more, unquote. Guess who said this? Former FDIC chair, William Isaac. So we have former FDIC out there saying there's going to be more bank failures. Folks, the whole system's a Ponzi scheme. It's imploding. How fast will it implode? We're going to find out. If you have your money in the bank, you are gambling. I'm not telling anyone to go take their money out of the bank because you have to have it in there. We're all trapped into the system of bill pay, right? Some people still send in their bill or they pay their bills through the mail. Some people, most people now are just digital bill pay through their bank, bill pay through their credit card company, their website. So wow, it's about ready to get real, folks. And people that doubted you and me, I know I see a lot of you people down in the comments. You say, yeah, I talked to my family about this. I talked to my friends about this. They think I'm crazy. They think I'm paranoid. They think I'm doom and gloom. They think I'm negative. Folks, this is reality. And most people now are going to find out what's going on. This is going to be the wake-up call of all wake-up calls here. So, all right, please let me know what you think down in the comments about these losses, or the contagion that they say they're going to contain, or they're going to prevent contagion, but contagion's already here because companies are losing a lot of money. We're going to see layoffs increase. We're going to see more people realizing what's going on with the banks, and they're going to be waiting in line at their banks. Probably see some big lines like we thought we'd never see here in the United States. So it's happening, folks. Hope everyone's well. I'm fine. I'm happy because I knew this was coming. I think you're fine too because you knew this was coming. So grab your popcorn, sit back, and wait for a lot of very good investment opportunities after this fallout. How long this is going to take? 6 months, year and a half, 2 years, 5 years. Great Depression 2.0. I don't know. Let me know down in the comments if you know, because I'm learning as we go along, just like all of you. Thanks everybody for being here. Big love. Keep stacking. Bye for now. Peace.